Welcome to the Morning Download Podcast, your go-to resource for personal finance, economics, and market insights. In just 8 minutes a day, we provide valuable information to help you make better money decisions. Don't forget to sign up for our free newsletter at https://www.morningdownload.bu. Subscribe. Let's dive right in. In today's episode, we'll cover December's positive outlook for investors, uncertain prospects for next year, top sectors for investment, AI regulation in the EU, and the possibility of similar restrictions in the US, troubled companies like Tesla, the use of multiple credit cards, Paramount shares rising, upcoming contract talks for Starbucks, China's falling consumer prices, the US adding 199,000 jobs in November, potential trouble for Tesla in Scandinavia and the US in 2024, AI scrutiny for Microsoft and Nvidia, lower consumer spending for Walmart and McDonald's, the advantages of not having a credit card for credit control, the benefits of using multiple credit cards, and the importance of being boring in investing.
Here's an interesting tidbit for you. Did you know that the top 3 sectors in the S&P 500 make up a whopping 50% of the index? Yeah, you heard that right. Information technology, healthcare, and communication services truly dominate the market. Big news in the world of AI regulation. The European Union has just agreed on a groundbreaking deal to regulate the use of artificial intelligence. It's the first of its kind. After more than 36 hours of intense negotiations, EU officials have hammered out a provisional agreement that will have a significant impact on AI systems, from the big players to smaller ones, like ChatGPT. So, what are the key takeaways from this deal? Well, let's start with the restrictions on facial recognition technology. The new rules will limit its use and also put a stop to something called social scoring using AI. This means that vulnerable groups won't be exploited through the use of artificial intelligence. It's a great move towards protecting people's privacy and rights. Now, you might be wondering if other major economies like the US will follow suit. And the answer is very possibly. They might also take similar steps, but don't expect anything to really kick in until at least 2025. Moving on to some other headlines making waves in the global economy. Paramount shares have soared after news of a possible takeover. Starbucks is looking to resume contract talks with its union in January. China's consumer prices experienced their biggest drop in the last 3 years. And the US economy continues to show strength with the addition of 199,000 jobs in November. So, it looks like 2024 might bring some challenges for a few well-known stocks. Let's start with Tesla. They're facing pressure in Scandinavian countries to agree on a collective bargaining agreement with their Swedish employees. They recently lost a court case in Sweden, and now the Finnish Transport Workers Union has confirmed that they'll stop loading Tesla equipment from December 20th. On top of that, a major pension fund in Denmark plans to sell its Tesla holdings due to the company not meeting union demands. These issues, combined with delays associated with the Cybertruck, could spell trouble for Tesla. Moving on to Microsoft and Nvidia, they're both facing challenges related to artificial intelligence, AI. The Federal Trade Commission, FTC, has expanded its investigative powers over AI, which means more scrutiny for companies like Microsoft. Nvidia, on the other hand, might struggle to meet their revenue expectations due to difficulties in the Chinese market. Additionally, countries around the world are starting to regulate AI, which could pose challenges for Microsoft and other tech companies heavily involved in AI. The UK is even considering an antitrust probe into OpenAI's partnership with Microsoft. Finally, we have retail and food companies like Walmart and McDonald's. Low-income consumers are spending less, and these companies are already lowering their guidance as a result. McDonald's in particular has ambitious expansion plans, but historically, those haven't always worked out well for them. All in all, it seems like 2024 could bring some rough times for these stocks. In today's economy, having a credit card is essential. While cash has its benefits, credit cards offer great perks that can't be ignored. The question is, how many credit cards should you have? Well, there are 2 schools of thought. On one hand, having no credit cards gives you better control over your credit score. On the other hand, having multiple credit cards can bring some amazing benefits. According to CNBC, having multiple cards allows you to afford both your everyday purchases and unexpected expenses. It can prevent a large expense from hurting your credit score. Equifax recommends having 2 to 3 credit card accounts. in addition to other types of credit. Having multiple credit cards can actually boost your credit score. It lowers your credit utilization ratio, which is the amount of credit you're using compared to the amount available. Most lenders prefer to see this ratio at 30% or lower. However, it's important to note that having multiple cards can also be problematic. Managing funds becomes harder, and there's a higher risk of exceeding your budget. You may also end up paying a lot in annual charges, so it's crucial to be smart about how you use your cards, as that matters more than how many you have. In conclusion, having more than one credit card can bring benefits, but it's important to use them wisely and be mindful of potential drawbacks. So, I came across this really interesting quote today about personal finance. It goes like this: "If investing is entertaining, if you're having fun, you're probably not making any money. Good investing is boring." And you know who said it? None other than George Soros. Now, let's break this down a bit. When it comes to investing, we often think of it as this exciting and thrilling endeavor. We imagine making fast money and being on top of the world. But according to Soros, if you're finding investing to be entertaining and fun, chances are you're not making any real money. In fact, he believes that good investing is actually quite boring. Now, you might be wondering why he would say that. Well, here's the thing. Successful investing requires patience, research, and making well-thought-out decisions. It's not about chasing the latest trends or jumping on every exciting opportunity that comes your way. It's about having a long-term strategy and sticking to it, even when it may seem dull or uneventful. So, the next time you find yourself getting caught up in the excitement of investing, remember Soros' words of wisdom. Realize that good investing may not always be thrilling, but it can definitely be rewarding in the long run.
In today's episode, we covered the positive outlook for investors in December, but the uncertainty for next year, top sectors to invest in, EU's landmark deal on AI regulation, potential troubles for Tesla and other companies in 2024, the pros and cons of having multiple credit cards, and the wise advice from George Soros that good investing requires being boring. Thanks for tuning in to The Morning Download, your go-to podcast for personal finance, economics, and market insights in just 8 minutes a day. Don't forget to subscribe for more helpful content and sign up for our free newsletter at morningdownload.com/subscribe.